Hey guys, welcome to my YouTube channel, and this is another episode on the mentorship. Right. So this is down to top analysis. Right. I know we are all familiar with top-down analysis, right? So this is different, down top analysis. And what does it do, and how will it help you? And number one is it saves you time. Right. I know, we're all used to top-down analysis. That means you have to start from the higher time frame to the lower time frame, right? That means you have to check higher time frame, what's happening in the higher time frame, then you go to the lower time frame. And we all know for the weekly time frame, it takes one candlestick to print. It takes a week to print one candlestick. On daily time frame, it takes one full day to print one candle. So I think it's just a waste of time trying to justify a trade you're going to take on a day, which is, that is if you're a day trader, and justify it with what is happening on daily time frame or weekly time frame. To me, that just doesn't make sense, right? So I'd rather just do the down to top analysis. So it saves you time because obviously, for me, I tend to look for high probability setups. So that means I definitely will not get setups every day on each pair. So that is why I have to check other pairs for possible setups, and I can't start looking for doing the top down analysis on each pairs that I trade. This is my watch list, by the way, right? And I can't start trading doing the top down analysis on each pairs that I trade, which doesn't just make sense to me, right? So I came up with a down to top analysis. And how do I do it? So number two, it even saves from some stupid losses anyway. So number two now, so how does it work? I think we're all familiar. If you've gone through my videos, the mentorship videos, you should be familiar with my setups, right? Which is the type 1 and type 2. But this is type 1, it's sweep of the previous low, a break of structure, then another break of structure, right? So this is type 1, and you expect this is a sweep, first break, second break, and this is the structural liquidity, and this guy is the low, right? So that means you basically just expect price to take out the structural liquidity and buy. That's type 1. And for type 2, you have a sweep of the previous low. Now before the break of structure, you have price creating another low, right? And this is a sweep, a break of structure, and structural liquidity, then this particular low here, and you have this. So this is the type 1, and this is type 2. So I only look for this type of setup. So all I have to do is look for this type of setups, right? Just these patterns first, right? Then I would move on to verifying it, right? So the first thing to do is let me list it. Do I do that? Right. So number one, look for setups. That's number one. Number two, you verify it or validate. You validate the structural liquidity, the sweeps, and co. Right, then number three, where is it coming from? Where price is coming from? Price is coming from here, right? So these are the three things that you want to look out for, and this is so important, right? These are the three things that you want to look out for every time, right? Number one is the setup, either type 1 or type 2. Number two is the validate structural liquidity, the sweeps. These kind of sweeps and structural liquidity. Now, how do you validate it? Number one thing you want to look out for when validating structural liquidity or your sweep is this. Number one, it has to be V-shaped. When I say V-shaped, the V, it has to be multiple candles coming together to form a V-shape, just like this, right? Multiple candles coming together to form this V-shape. Multiple candles come together to form this V-shape, right? So it can't just be one candle or a wick, right? You can't consider it your sweep or liquidity at all, right? At the same thing as the structural liquidity as well. It has to be either V-shaped or A-shaped, right? Now it has to be multiple candles coming together like this to form a V-shape, multiple candles coming together like this to form an A-shape, right? And that is the first way to verify your liquidity or structural liquidity. Now, the second way to verify structural liquidity is by knowing the actual range, right? The range. That means it's you have to take your Fibonacci tool and you take it from the low or from the break of structure, the first break of structure to the low, right? So your structural liquidity must either be at the 50%, below the 50%, that is for buys, right? Must be either the 50%, very close to the 50%, or at the 50%, or a little bit below the 50%, but it must not be too far away. Then it is no longer valid. Your structural liquidity must either be at the 50%, below the 50%, or very close to it. It must never be too far away, because that way it's not going to work. Right, so these are the things that this is how you actually validate your structural liquidity and your sweeps, right? That's it. That's how you validate it. Now, to the next part is where price is coming from. You want to know where it's coming from and where it's likely going to. That means is that the discount zone on the higher time frame? Is it aligning? So that means, okay, now we have, let's assume we have a sell set up on the 15-minute time frame or 1 hour time frame, right? So now when I want to validate it, we want to know if you have a sell setup, that means it should be at the premium zone, right? Based off our basic market structure, right? Now this is a sell. This is a sell structure, right? This is a sell basic market structure, right? So if you are looking for sales, we should obviously be looking for sales around this area, right? We should obviously be looking for sales around this area here. This is the premium and this is discount zone. So, but then if we see a sell setup here, if you see the type 1 setup here, do you think it's going to hold? Obviously not. Most of the times it's actually not going to hold. You're taking out and price will actually eventually come back here to sell, right? So it is very, very dangerous to actually take trades like this from this zone or sells from a discount zone. So you always want to make sure that your setup actually aligns with the higher time frame structure, right? That is where price is coming from. And for buys as well, it's just the same thing, right? You should have let's assume this is a higher time frame buy structure, right? Buy structure, and your Fibonacci tool as well from the low to the high. Pretty much means this is the premium and this is a discount, right? You cannot look for buys here and you should not look for sells here. Just the same thing here, right? So that means if you see a buy setup here, you want to avoid it and wait for price to come to the discount area, right? So now how do you now use the down stop analysis to, you know, form a setup and all of that? So coming to the market on this particular day now, and we can obviously see the type 1 setup, which is this guy here. We can see a sweep of this low, and we can see this guy expected to be protected. We can see a break of structure. We can see another break of structure, right? Then this is obviously the structural liquidity, which is the last low before the main low. If you're not familiar with structural liquidity, you can just check my previous video. It's a link below here, right? So we have this. So now that means this is type 1 setup, and this could just be our first setup now. This is the first thing we want to look out for. Now the next thing is to validate it, right? We can see this is right series of candles coming together to form a V-shape liquidity. The same thing here as well, series of candles coming together to form a V-shaped liquidity. Now the next thing is to validate the structural liquidity. That's the first way to validate it. The second way now is to use the Fibonacci tool. Now I take Fibonacci tool from this low, from the break of structure, right, to the low, from the break of structure to the low. Now you can see that this structural liquidity is below the 50%. Let me make the Fibonacci tool bigger, right? So you can see it's below the 50%, which validates this structural liquidity, right? That means the structural liquidity is valid, right? And for those of you that are probably asking for my Fibonacci tool settings, this is it right here. This is it. So you can take a screenshot or something, but this is the settings. You're welcome. So moving on, we've been able to see the first thing, which is the setup. That we're able to validate it, the structural liquidity and the sweeps, right? This is valid. This is also valid. Now, where is price coming from? Now, remember this story here. Remember this story here. So now we need to know where it is coming from now before we now, assume to take a trade directly from here. Before we assume to take a trade directly from here, we need to know where it is coming from. So this is the 1 hour time frame. That means we need to go to the 4 hour time frame, which is the next bigger time frame. So according to the 4 hour time frame, coming, I think I need to clear all of this. All right. And our setup is right here. Right, our setup is right here. So according to 4 hour time frame, we can see that this is a break of structure. This is a break of structure, right? So that's a break of structure, and that means this low should be protected, because obviously we can also see a sweep right here. So that means this low to this high is a swing structure, right? From this low to this high, we took our Fibonacci tool from this low to this high, right? So that means this is a premium zone and this is discount zone. And look at what we have now. So right now we know that our entry from the 1 hour time frame is currently at the premium zone, right? That means it doesn't align with our setup. Our setup doesn't align with the current structure. Now you see how we look for the setup first, then we went to the higher time frame. So we didn't go from the higher time frame to the lower time frame. Now we're going from the lower time frame to the higher time frame, right? So now we can see that it doesn't align with this higher time frame structure. So all you basically have to do is ignore this trade. You don't take the trade. That means if it doesn't align, then it's not a good trade, right? And what happens? What happened to it? Eventually, we can see that right now we can see that the setup failed, right? Even though there was like a little whatever it is, but then it eventually failed. But now we know the reason why this actually failed, and we're able to learn from it. We know the reason why this particular setup failed, why it didn't hold. We know why it didn't hold, because it didn't align with the higher time frame structure, right? So that would have saved you from this unnecessary loss, right? So moving on now, you guys have to remember that we already know that this zone now is a discount zone, right? So and we also know that whenever our trade fails, it is not about the setup or the patterns, because most of you just see this whole stuff as only patterns, right? And this is where putting it all together, that actually makes it more sense, right? In the sense that now you're able to look out for these certain things, how to validate all of these things, then the higher time frame correlation, right? So now we can see that this is currently the discount zone according to the higher time frame. So that means this should be liquidity, right? That price has now taken out, right? That has now taken out. So now we can now see, what can we see again now? Now we can see a sweep of this low, a break of structure, then another break of structure, right? Another break of structure, which is type 1, the type 1 setup, right? Sweep, break, another break, right? Which is the type 1 setup, right? And the QMR comes next, right? The QMR comes next, right? So now you have a setup, the same setup that failed here is the same thing that we now have here again, right? So that's the first thing, set up for us, then validate it. Now we can see that this is also valid. Like this is a V shape liquidity that was swept. Just V shaped. It's not just a candle. Unlike this guy here, look at this is just a wick. This cannot be a structural liquidity, so it needs to be V shaped, right, or A shaped. Now we can see that this guy is valid. Now the structural liquidity, is it valid or not? Now we have the structural liquidity, it's also V shaped. But now the next thing you want to check is if it is at least at the 50% or close to the 50%, right, for it to be valid. So you take the Fibonacci tool as well from the break of structure down to this low here. Now you can see that the structural liquidity is exactly at the 50% zone, right? It's exactly at the 50%, which now validates the structural liquidity, So that means this setup is validated. That means it's actually correct, right? And then your QMR, which is the last bearish candle before this bullish movement here, or the order block that failed, right? Order block that failed, and you have it right here as your POI and where you expect price to actually buy from. However, where is price coming from? Now we're on a 1 hour time frame. We have to go into the 4 hour time frame to see where price is currently coming from and if we expect it to hold or not. So this is the 4 hour time frame, and we can see what we have here. This guy here failed, obviously, because we actually know the reason why it failed. So down top analysis, right? So will this guy fail or not? This is number one. This is the discount zone, right? This is a discount zone, and it also aligns with our trade setup, which is the buy setup, right? Automatically that means this should be a good trade, right? Let's go back to the 1 hour to see the result. And yes, price tapped directly into the zone, and boom, we have a very nice setup and a trade, right? So it's as simple as that, but verification of a lot of things are very important, right? And also looking out for the high probable setup, right? And I recall giving out a particular trade from here on my Telegram channel. I gave out a particular trade. Now we can see another setup here, right? We can see a sweep of this low. We can see price taking out this high, right? And we can see this guy has a structural liquidity, and this guy should be protected. So I recall giving out this trade on my Telegram channel, I think on Twitter as well. So now what can I see here? And the first thing first, I can see structural, the sweep of all these lows here, then structural liquidity right here, and I can see my QMR right here. So all I have to do is validate this guy. You can see the sweep, the kind of sweep it is. You can see price like V-shaped, and also the structural liquidity is also V-shape, right? Price come together to form a V-shape. Now the next thing to do is use Fibonacci tool from this break right here to this low, right? And I can see that the structural liquidity is below the 50%, which also validates it, right? And I have my QMR entry, and I also know that this is a discount zone on the higher time frame. I'll just take my trade directly from there and cover this low, right? Cover the low. And I recall giving out this trade, and boom, we have a 1 2 3 trade right there, and that's just it, right? So I'm able to take this trade and this trade. Even on the lower time frames, you probably would have seen about 4 to 5 buy entries here using the same QMR setups and all, right? So that's pretty much how it works. Setup, once you find the setup, you validate it, then where is price coming from? Just very simple. Is it from the higher time frame structure? If you're looking for a buy setup, or if you see a buy setup, right, then you want to validate it, does it align with the higher time frame structure? Does it align with the higher time frame discount zone? or it's currently at the premium zone. So the things that you want to look out for to get an accurate trade. However, guys, this is how I was trading like earlier this year and late last year. I think some of you already know I kind of like have gotten better with trading. I don't set limit orders anymore. Right now, all I do basically is have my setup. Then I have about 3 to 4 things to also add as confluences, right? Which are tools, to like trading tools to add as confluences, and one other flow tool, which is the footprint chart. So, immediately price taps into my POI now, after using these tools to also verify, add as confluences for my entry or for my setup. Then the next thing I do is immediately price taps into my POI. So instead of me to just, have this buy the order limit or buy limit order, I'd rather just wait to see who is currently in control. Right? That means when the immediate price taps into my POI, I'll use the footprint chart to see who is in control. Is it buyers or sellers? Because with the footprint chart, you're able to see through each candle. You can see the sellers and the buyers, right? So that if you have a buy setup and price taps into your POI, you obviously want to follow who is in control, which is the buyers. So you have to wait to see the buyers come into the market, and that's pretty much how footprint works. But you can do your research, of course. Do your research, and you can also add that as confluence as well. Learn from YouTube, learn from anywhere how footprint works. It's actually going to help you with your trading as well. So guys, I'll see you guys in the next video, right? And for those asking me for recommended, or asking me to recommend a proprietary firm, which is a prop firm, right? I recommend CFT. So far there's been no zero scandal. They've actually paid a lot of people that we all know and that we see daily. So these are people that I'm also affiliated with, and this is not because of my affiliation with them, but I've been working with them for over a year, and these guys are, I think they are the actual goats in this FX market, aside FTMO. But CFT, you should actually look trading with CFT, and I think they actually also they work with MT5 as well, so which actually makes them a lot better than other firms. So CFT it is, and they have a lot of offers as well. I think they even did the Black Friday a few days ago, and it's probably still on till now. So about 30% off. I will drop the link in the description, and get your accounts with them. Practice what I just taught you guys, and yeah, I'll see you guys in the next video again. Peace out.